Good morning, everybody. Welcome to the Locking Your Success Options Trading for Income weekly update for June 6th, 2014. First, I'd like to thank everybody for their support and kind messages over the last week. And I'd also like to give you a reminder that our time on the earth is limited, and to make sure you make the best of each and every moment, because you never know when your time is going to be up. I also urge you to go out there and just take action on the things and people that are important to you, because you want to make sure you get everything in before your time's gone. So go ahead and do that. I urge you to do that. All right, so let's just move on and get our disclaimer over with. Just a reminder that the presentation is given for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please note that the risk of trading options can be substantial, so please be aware of all your risks prior to placing any trades. And we're using hypothetical computer-simulated performance trades that are believed to be as accurately represented as possible. However, live results may vary. So if you're watching this on YouTube or some other venue, come on over, check out our programs, M3, Bearish Butterfly, ROCK, M21, group coaching, then the trading triangle, one-on-one coaching program. Join our mailing list and get the free report, 7 Secrets Becoming a Successful Trader, and sign up for the weekly webinar at lockingyoursuccess.com. And programs in development, we have a trading triangle book that I'm working on, which is going to lead to our online trading triangle course, which is going to eventually be a lot cheaper than the one-on-one coaching stuff. So that's going to be really cool. It's going to take a little while to get out, but that's what we got going on. We have the Triple S trading series, which I'm trying to get done by November 2014. We have a whole program that's going to be coming out for beginners to get them up to the level where they can actually trade like an M3 or something like that. And we got some directional trading system coming out late in 2015. So lots of neat things coming up. All right, let's take a look at what's going on with the markets here. Last week we were expecting that we're going to get a retracement this week. I thought the market was going to be down for the week last week, although it was possible we may get a bit of an up move. Here on the SPX, we were pretty much flat on Monday, and we're down the rest of the week. The Russell had a nice little pop-up on Monday, and then came down the rest of the week. So it was pretty much acting as expected. We just kind of came into our support levels here. I am still bullish as far as the SPX, the NASDAQ, and the Dow. I mean, these charts, there's nothing bearish or sideways about them. We had this nice little breakout here. This is just a normal retracement. We have the Dow, which is the same thing, normal retracement into a support area, and the NASDAQ, we had this cut breakout, and we're just retracing to support. So, as everything looks, we're likely to short-term be bullish. So, if we look at the Russell, we came here, we broke out, we came into a support level. Now, longer term in the Russell, I am still neutral or sideways. I mean, we said months ago that we expected to spend at least 3 months in this wide sideways range from 1080 to about 1215. We haven't had any changes there. It's still the same. Being short-term bullish, I expect us to come up into expiration week. If you notice for the last year and a half, I'd probably say 85 to 90% of the time we're having up moves into expiration week. They're fairly aggressive. And unless we have some instability in Iraq, which may affect that and knock the markets down and set them in for a deeper retracement, but barring any really bad news there or anything that creates instability in the market, I'd expect this a move up this week. So that's what I'm kind of thinking for the markets. And let's take a look at how our trades are doing. If we come in here, we had the June V Condor on, and this has got no adjustments. And if you remember right, we're just waiting for this thing to expire. I could close this, but I'm just going to let it go. The chances of us hitting anywhere near our short strike of 10.10 or 12 1140 in the next 4 days would be incredibly low, so not concerned about that. If we take a look, let's see, what else did we have open? We had June M3, and I'm just going to go into BackTrader for a minute. If you remember, the week before last week, we put this in what I call lockdown mode, where I don't want to necessarily trade out of it. If the market happens to come back into this range, then we can make a little bit more money. Or if it stays up here, I can gradually take out these vertical spreads and raise my profit a little bit. But this is pretty much, I've given up. I don't want to fight it anymore, and just going to let this expire. So what we did at the end of Monday, because the market was up, we started coming in here and taking these 1120. I did two 1120, 1130 verticals, which is just going to raise our line up a little bit. Then I believe it was on Wednesday, I moved them again. Coming Wednesday, I took out two of these 1130, 1140s. Now I only have 5 here where I had 7 before. Again, raised the expiration line up a little bit. And a lot of the time, I'm just going to continue to do that into expiration. But this week's a little different. I have a very busy week this week, and we're coming into expiration. I just don't want to fool with it. So I ended up just closing this on Thursday. So if you come to Thursday, this position, well, I think it ended up being up around 2,600 when I closed it. Let me see what the numbers are. Yeah. The numbers were 2670 by the time it was closed out for a little over 5% profit. We were able to work our way out of this thing. So that puts the June M3 trade in the books for the year. Ended up being a pretty good trade. So let's see what else we had. We have the June ROCK trade that's open. The market has been giving us a little bit of trouble for us. If you remember, we went into a ROCK position. It was kind of borderline. Let's just switch over to our June ROCK trade and go back to the beginning of the week here. This is what we looked like on Monday. We were earlier, I think it was a week or two before this, we had a ROCK trade that was positioned as an M3. The market ran up. I did the delta theta test. It was kind of borderline. I mean, it just barely tagged the number. It was close enough for me to go, you know what, I'm thinking I'm just going to switch this over to a ROCK trade because the market was a little overextended. Of course, we got this extended up move, which, you know, that's the problem with being, when you get into this high theta type of a position, you get big market moves that's going to draw the trade down. I would have been better off initially to stay in with the M3, let the market run a little higher, but didn't do that. We kind of locked in here, and we were fully scaled into our ROCK position. We ended up starting to scale out of our 1120s because of the large up move. Monday, of course, we got even a further up move, and by the end of the day, I ended up scaling completely out of these 1120s. They're gone, and I ended up in just having 10 1160s, 10 1180s, and for those of you who know, this is just a bearish butterfly now 2/3 entered. And being in expiration week, or less than 21 days to expiration, we're just going to treat this as a bearish butterfly into expiration. So here we are, 2/3 entered. Position looks like this. It's not really a bad position. The thing is, this gains money very, very quickly here as long as the market slows down. And if we push, and this stayed in this position this way until Thursday towards the end of the day. So let me show you Thursday at 1500. As soon as this updates, this is up about $1,100. It looks like this. You know, now we're getting some downside pressure. We're actually hitting our delta limits. If you remember, bearish butterfly into expiration trade this size, we allow plus 500 during the day, but if we're going to go overnight, we usually like to cut this back to plus 250. So if we come towards the end of the day, I came in here and added 5 butterflies at 1140, And at the time when I did it, which was about 1440, just before, I'm sorry, not 1440, we were on the 12th. It was about 1502, right? So it was just after 3 o'clock. Okay. Yeah, so here's the T-log for this. On the 9th, you can see where we came in here and bought back these 6 1120s. On the 12th, you see we bought the 5 1140s, and this is what we look like at the end of the day. Like I said, at the time we did it, we were about plus 250 delta. And then if we come into Friday, we got a nice pop in the profit and loss because we got a bit of an up move here, which again is a benefit of this, right? So here we are, and we were down in here. We got the up move. We got our profit up and over the 10% range. And again, being an expiration week, knowing I'm not going to be here this week, I thought that this was a good time to shut this down. So that's what I did. I just closed the position out. If you look at the T-log, did it towards the end of the day here. And by the time I closed out, I didn't have over 10%. I would have liked over 10%. But by the time I closed out, we were only up, let's see. We take a look at our reports. We're only up about 45.50, which is slightly under 10%. Good return for a month. I kind of goofed up a little bit, but I would have liked to pull at least 10. But I'm perfectly happy with this, so that's good. And of course, if I decided I wanted to stay in it for another day or two, certainly could have easily pulled 10, maybe even 20 out of this if the market remains relatively flat like it looks like it's going to. But this is good. Happy with that. So that is all, let's see, all of the June trades. Now I can show you how we're doing in June so far, and I'm pretty much guaranteed that, I mean, nothing's a guarantee, of course, but we're very, very likely that we're going to come in with about a 5 or 6% win out of the V Condor in June. So far, we closed the Bearish Butterfly. This is the Bearish Butterfly trade here. The first is a Bearish Butterfly, second is the M3, third is the ROCK, and last is the V. So I'm just going to move the screen here. We got 13.7% gain for the June Bearish Butterfly. We had a 5.3% gain on planned capital numbers for the June M3. We had a 9.1% gain for the June ROCK trade, and we're going to probably have about a 5% or so on the V Condor. So that puts us for the year at 76% gain on a Bearish Butterfly, which is pretty much average, slightly above average for halfway through the year. We have our M3, which is 40.4%, which again is slightly above average for the year. We have our ROCK trade of 60.1%, which is average for the year. We have our V Condor, which is going to be probably 21% by the time June's closed. That's going to put us up about 21%, and that's a little below average for the year. So we're pretty much on track for the year. We're estimated for the year of a 95% return on our planned capital with these trades that we're doing. We're corrected for the reserve because if you remember, we hold 50% of the account in reserve. It should be about 47% for the year. And our actual year-to-date is 48 on our planned. It's going to be about 50. It's going to be a little bit higher than that once the, not 5% higher, but maybe another % higher than that when the V Condor is closed. And on our corrected for reserve, about 24. So everything's going fine with our June trades. So let's move on to our August stuff. I had I'm sorry, not August, but July. We have a July V Condor, which is currently, just sitting right here, currently down about $1,000. I had to come in here on Monday. I hit a maximum delta limit. I had to buy back another one of those 1,200 calls. here is what the position looks like. Let's just kind of widen this out. I'm not particularly worried about this. If the market creeps up and doesn't get too aggressive to the upside, this won't be too much of a problem. If it comes down, it's really not going to be a problem. Our only scenario here is if we blast up past probably 1180 or 1190. I actually do think that's going to happen, so that's going to make this for a bit of a rough trade. We're going to end up buying these back, rolling this back 20 points, and probably rolling the downside up maybe 40 or 50 points. We'll have to see when the time comes how far this we have to go to get a decent credit, and we're probably going to end up moving the straddle. Yeah, we're going to wait it out, though. We don't know what's going to happen. The market could just as easily come down or just stall here. But if what happens, if it goes the way we expect, I'm probably going to end up rolling this back a little bit. Not the end of the world. If you have to roll this back twice, it's probably going to be a losing trade. Usually you can roll it back once and still take a decent profit, especially this early in the trade. So it's still looking all right, but suffering a little bit. If we take a look at the July Bearish Butterfly, this also got beat up quite a bit this month so far. Let's go earlier in the week, actually. Let's just go to Monday because we'll show you how far down this is drawn. Our timing on entry in this wasn't the best if we're just going our 56 data entry. Here about 3:30 we are, let me take a look here, T-log. 1540 I made the last adjustment. So this is before the trade was adjusted. So I'm sitting here. I'm down about 10.5. If we come to, we could actually go to 1530. Coming at 1530, it's down about almost about $10,000, which is about 2/3 of maximum loss. To be expected when we get a move like this, right? We entered way down here. This is a fairly explosive move up. What are we up? About 80 points or so, I think, from when we put this on. So we had an automatic roll trigger point at 1170 to roll this 1120 up to an 1120 up to 1180 butterfly. So this is what we look like before our adjustment. What we're going to do is it's going to take this 1120 up to 1180. And this is the adjustment I don't like to make. I kind of hate to make it, but let's just go into Tuesday morning, I'm sorry. But I made the roll as per guidelines, and this is where we were sitting on Tuesday morning. From there, that was it. There was really no other adjustments for the trade. So we did this Monday afternoon. By Tuesday morning, the pricing had changed where we gained a little bit back. What I like about this position here is it does tend to gain money very, very quickly. So if we come to the end of the day on Friday, right, we're only down about 3,200. There have been no further adjustments, and this price comes back pretty quick. Realistically, this will be up money within 2 days if the market doesn't move very much. If it moves, we'll continue the good fight to the upside. To the downside, we don't really have any adjustment points for quite some time, so we'll probably be okay for a decent downside move. An upside move is going to adjust at about 1180. So we, of course, will be drawn down a little bit if that happens. But this isn't terrible. This is the way the trade works out fairly often. It draws down a little bit, but there's still a good chance that we'll make a decent amount of money here this month. So still happy with this considering the move we had. I think this will take a move to 1215. As long as it's not too fast. If it's a normal-sized move, it should be fine. If we get some really harsh moves, it may take us out. But this is looking good. And let's see. The last thing that I have going on is since I exited the June M3, I did enter a July M3. And I'll show you how I entered that right here. This is butterflies at 1130. I did this actually on Thursday. I had butterflies at 1130. I have 8 verticals here, 1130, 1140. And I have an 1160, a 1060 call, and this looks like this, nice and flat to the upside. Our value is a little bit depressed, but everything is looking really good here. No complaints whatsoever. And if we take a look at our T-log, this was our entry data. I did it midday on Thursday. All right, that's all I have for the market, and that's all I have for our trades. Does anybody have any questions with anything? All right, RUT moves up today or tomorrow to 1180. What are my thoughts on entering early into a bearish butterfly in August at the 1160 strike? I really like an August bearish butterfly right now. I'm actually in an August bearish butterfly right now. I'm in several of them. I entered them. Let's look at the charts. I think I talked to, I don't know if I was talking to you guys about this. I definitely talked to some clients and stuff about this. I thought 1180 was a spectacular place for an entry on an August bearish butterfly. Therefore, this day on Monday, I had automatic orders to come in and hit them, and I actually did end up getting entered into a fairly substantially sized bearish butterfly at that point. So obviously right now that's going well. I do expect the market to go up and to have to fight it a little bit, but I am entered into that position, so I think that's a very good opportunity to enter it early, yes. Okay, talking about the bearish butterfly, if I already entered second, thirds, if I already entered the second, third, and we see a large move to the downside, to enter the new reference point, I need to take out both bearish butterflies. I don't completely understand the question. Essentially, with a bearish butterfly, if you are entered in 2/3 and you get a large downside move, you're just going to drop back to 1/3 entered. So you'll just be in a single butterfly. If it hits the trigger point, we're going to roll back to at the money if you're following the bearish butterfly guidelines. Although in the bullish market would be okay to roll back into an M3. But that's hopefully that answers your question. You would only reset the reference point if you have to move the lower bearish butterfly. Okay, I got a request to email T-logs to the June M3 and ROCK trades. I mean, send me an email about that, Cheryl, and I'll do my best to get it out to you. It's a fairly busy week, but I'll get it out to you at some point. Have I ever looked at butterfly calendars instead of using flies in these strategies? You can do a triple entry calendar strategy. I mean, they're out there. They work okay. They're a little wider. And the thing that I personally don't like about calendars is that you don't know what your expiration line is. So if you have a calendar, you have for example, if I'm looking at, I don't know, what do I got going on here that I could show you maybe? Well, let me just look at a July bearish butterfly for a minute. If I have a calendar on here, and I'm looking, my expiration line doesn't stay here because most of this value with the expiration lines is going to be dependent on the back month, the value of the back month call when or back month option when you expire. So I don't like that variability, so I don't like that. I mean, triple calendars work fine. You have to be, calendar brings in another dynamic. You have a front month volatility versus a back month volatility, and you have to make sure that those are in line when you enter it. There's too much to go. There's too much to go into that as far as this update. I mean, that would be a whole lesson in itself. But you have to watch your front month versus your back month. If you're proficient at looking at your front month versus your back month, you understand it. You know when you can enter these. I mean, it's a decent trade. Usually they don't have the range of a butterfly, and also a misconception about a calendar because it's positive vega on an analyzed graph. People assume that if volatility goes up, or we have a quick down move and we get a volatility spike, that the value of the position will go up. That's not necessarily true. It does happen sometimes, but the reality is that because you have a front month option that raises in volatility a lot faster than a back month option, a fast hard down move often will draw down a positive Vega calendar as much as it will a butterfly. Sometimes even worse, at least temporarily. Usually the butterfly comes back. I mean, usually the calendar will come back if the volatility remains high, but you still get that spike drawdown, which is damaging. So anyway, that's just a little discussion on calendars. For my M3 after lockdown, you just take off the put debit spreads to raise your 10. Yeah, you can take them off or widen them out. And in my case, I widened them out and then started taking them off, and it'll raise up your. I mean, it brings in a little more value because you're selling put spreads, right? And that'll just raise it up a little bit. All right, assuming Russell moved up to a favorable level in the bearish butterfly, what point would you say is too early to enter? Okay, so this is my understanding is this is a question that relates to what month to enter in a bearish butterfly. I think it's better to in other words, if say the Russell moves up to 1215 in 3 days, right? Fantastic opportunity for a bearish butterfly to come on. The question is, what do you do? Do you do it 70 days expiration? Do you do it 90? Do you do it 30? That's going to be dependent on, I use an opinion on how fast I think the market's going to come down. If I think the market's going to come down relatively quickly, in other words, I think the market, if I think it's just completely stressed out and there's just, the chances of it going higher are they're just almost non-existent, then I'm going to want to be in a front month, something that is, maybe like a July. I wouldn't go into a June right now because there's only a few days to expiration. I mean, that would be very aggressive, but I would go into a July. If I thought that, maybe we had another 30 or 40 points, I might want to go further. I might not want to go into a July, because if I enter a July bearish butterfly now and I go up another 30 or 40 points, that's going to be a pretty big drawdown for me. If I'm right and the market comes back, then that's fine, but I might not have, what I'm saying is I might not have time for the market to retrace. So in that case, I'd probably go for an August expiration. If I was further, August expiration, which is more than 56 days right now, it's maybe 70. If I was in an extremely low volatility environment, I might go as far as 70 days. Normally, I won't go any more than that. You go much more than that, even if you do get the down move, the volatility increase decreases the value of the butterfly so much it takes forever to gain any money. So, I mean, 70 is probably about the most I'd go, and that's if I was mainly in a cycle where I thought that, this is an opportunistic entry, but maybe I'm 40 days to expiration, and I just don't think that's enough time for the market to blow off and come back. Then I might go to a 70. But other than that, I'd probably go with a 40. Okay, so hopefully that answers your question, Casey. Do I have triggers to convince me to roll up the V condor? Yeah, I mean, it's a little bit judgment, but essentially if I can't keep a 1-to-1 delta theta ratio, if I go to a July V condor, see how my delta is 70, my theta is 90. Eventually what's going to happen is I'm going to start buying these back, and it's going to flatten my delta out, but at some point I'm either going to have no theta, or I'm going to get to the point where, maybe my delta is I adjusted my delta down to minus 80, but my theta is still only 80, or I get maybe a minus 60 delta, 60 theta. When I get like a 1-to-1 delta theta ratio, which usually happens depending on how far from expiration we are, is going to happen right around 1180 probably, maybe 1190, 1185. That's going to happen to me where I just don't have any opportunity there anymore. And what I'll do is I'll come in and I'll just roll at 20. So that's what I do. And thank you for taking your time. You're welcome. I try to explain as much as I can. Ever enter a bearish butterfly 2/3 in? Yeah, if I'm extremely, because what usually happens with the market, lately especially, is we get these really, really big up moves, and then once the market's flattened out, it usually stays there for a while. So you kind of want your theta never up. If you enter in a 1/3 bearish butterfly, it may be you may not be making as much as you could. So yeah, so in those cases, if I'm really convinced that the market's overextended, I will definitely enter in a 2/3 bearish butterfly. I'll enter fairly negative delta, and I will take the butterfly off if the marble goes over the hill per se. If I hit the top of my T+0 curve, and maybe a little bit behind it, go slightly positive delta, it's a good time to take it down. Or maybe even reduce your size back down, get back to 1/3, and play it from there. All right, so I think that's it. Thank you, everybody, for condolences. And have a great day, everybody, and have a great week. We'll talk to you on Monday. Bye.